Hello, investors. This is Ted Zhang, portfolio manager with Revere Asset Management. Today is Friday, January 10th, 4:50 p.m., coming to you from Fort Lauderdale with tonight's Revere Roundup Daily Market Insight video. Market state, short-term pullback. You could also label it pullback, but we're not going to fight over nuances here. Market leaders, we currently have neutral. Point being is there's still a fairly great number of leaders that are holding up well, and we'll definitely go over many of them in this video. Short term, of course, all major indexes below the 21 EMA, and that is why we have it as a red arrow. Medium term, it is on the fringes right now. We currently have at neutral. S&P is below the 50, IWM, mid caps, and Dow below the 50 as well. But the Qs are hanging in there. It did close below the 50, and this will probably get revised to red soon if we do not reclaim the 50-day moving averages. Long term, all indexes still above the 200-day simple moving average. So what happened today? Hot labor market data. Uh, Data leads to broad selling. Silver linings. Many leaders have held up well, and they're starting to see some themes develop, especially in the AI infrastructure energy areas. And we'll definitely talk about that. 21 over 21 list, down 0.68%. Again, leaders holding in there. Big 8, down 1.58%. RG8, down 1.83%. S&P, down 1.54%. Equal weighted, 1.4, down 1.46%. QQQs, down 1.56%. QQEW, down 1.47%. So the S&P and the NASDAQ and the equal weighted indexes pretty much results in the same numbers today. Pretty interesting. Dow down 1.63%, mid caps down 1.39%, small caps was hit the worst today with the rates and the dollar rising. And that makes sense because there's some companies that make the least amount of money and are highly interest rate sensitive, like the biotechs and the regional banks. They were down 2.22%, Global 60/40 down 1.11%, and GROTECTION down 0.95%. As we always talk about, the dual mandate of GROTECTION is to grow assets when in an uptrend and protect assets when in a downtrend. And we are serving that purpose and that mandate right now, as GROTECTION is only down 95 basis points and the S&P is down 1.54%. So jumping right into the S&P 500, as always, we've just seen some mass distribution in the last few weeks. As I pointed out in the last video, it started off with 1 here, 2 here, 3 here, 4, 5, 6, and 7. And this was also a churning day. So you can call it 8 distribution days within the last 5, 6 weeks. And that's definitely a warning sign. And previously, distribution days and clusters like this would make us heavily reduce. And we have begun to trim and reduce our beta. But especially in the new modern markets with algos and high frequency trading, what matters to us most is the combination of the indexes, sectors, and leading stocks. And we'll go over it in a little bit, but there's still plenty of leading stocks holding up well. And that is definitely a good sign for the markets. And these are the names that we are focused on and targeting for when the markets do firm up. And when I say markets, I mean indexes, because when they do bounce off their lows, whenever they do decide to put that in, the leading stocks holding up the best, showing the most relative strength, will be the ones to accelerate the quickest out of their bases. RSP, really back to the 200-day, which is amazing. It had that record number of down days in a row, and that was already a warning sign. It continues to live below the 8 EMA this entire way down. And right now we're back to the 200-day moving average. So it's really key to see if we can find some support here. Qs close below the 50-day and the January 1st lows. So we're making a series of lower highs and lower lows now. And the next key level is this 503 and 500 area, which coincides with the pre-election breakout. We'll see what happens there. So far, we're above it, but this is looking quite weak as well. And the Qs have its own large set of distribution days too. Equal weighted index also like the RSP back to the 200-day moving average. Finding support so far, but this is really hanging by a thread right now. The Dow breaking this little bear flag. This also looks like it wants to test its 200-day moving average, which is currently at 40,928. Mid caps, higher rates, higher dollar. Horrible for the mid caps and the small caps. They make less money, they have less free cash flow, they have more debt, so they're a lot more interest rate sensitive. And that also broke this bear flag. And looks like the 200-day is next as a support level. Russell, same thing. Pretty much touched 200-day, was maybe a few basis points off, broke through that bear flag. Same thing as well, closed below 2,200. The VIX rose 7% to 19.54, almost back above 20. 20 is where you start taking it as a correction warning. And we'll see. The VIX definitely looks bullish here and it wants to spike. Oftentimes VIX spikes can put in lows in the markets. So that's what we were watching for. Right now, elevated VIX leads to choppier environments, higher volatility, wider ranges, and that can often really chop you up and you'll sustain paper cuts for no reason at all. And for us as trend followers, low risk traders, we do not like volatility. We like the smoother, easier, low volatility uptrends. As I talked about, the dollar continues to make new highs, putting pressures on equities. Gold, interesting enough, was up on the day with the dollar, and they're oftentimes inversely correlated. But gold is back above the 821.50, and we actually did buy 5% size in GROTECTION as well. Silver, reclaiming the 200-day, but getting rejected by the 50-day. GDX, still relatively weak to gold. RS line declining. We tried rallying above the 200-day and 50-day, but we got stuffed so far at the 200-day and the 50-day moving average. Bitcoin, really nice finding support at the 50-day moving average. If we go to the actual Bitcoin chart, yesterday we briefly undercut and reclaimed this December 30th low, and so far we followed through, reclaiming 93,500 as well. So if we continue to hold the lows of the space, maybe a overshoot and reclaim, this is looking constructive for a potential base that is building right now. Currently, it's about 1, 2, 3, 4, 5, 6, 7 week base, and the more bases, bigger the potential continuation move. So that's what we're watching there. And finally, bond yields were all up today. 1 year is up 6.6 basis points. 2 year up over 11 basis points. 10 year up over 7 basis points, and 30 year up 1.8 basis points. And this will wrap up the inter-asset correlation. It will go to the tail of the tape. The first thing I want to bring up that relates to yields and the dollar is that news, hot employment data today. Non-farm payrolls came in at 256,000 versus 160,000 expected, and unemployment rate came in at softer at 4.1% versus 4.2%. What this means is the economy is strong, but in the current market context, that is negative because it shows if the economy stays strong, people could be making more money, they'll be spending more dollars, and that could lead to higher inflation, which is exactly what the Fed does not want right now. Sticky inflation would present a messy just environment for the Fed because they are cutting rates into this as well. So they're definitely in a sticky situation for the Fed. We'll see how it all resolves out. Operating under the bear case below the 21 EMA. We've day count 13-day consolidation to down one now. We'll call it a breakdown. 3 days above the 8, 3 days below the 8 EMA, 21, 3 days below the 21 EMA. Expectations are still neutral because leaders are acting well, but that could turn to negative if leaders start breaking down. All right, so sectors, bond yields were up, dollar was up, bond yields were down. Oil, gold, and Bitcoin were up today as well. 7 out of 8 sectors in S&P were red, except for XLE. Regional banks down, RK down, semis and builders down, interest rate sensitive names. Today in GROTECTION, we trimmed NVIDIA, bought gold, and we bought a hedge in SPXS as well. 0.99 beta minus 2.55% open heat. The bottom line, hot labor market day leads to broad selling. And silver linings is that the leaders, there's still a massive group of leaders showing relative strength. And we'll go over that right now, actually. So charts of interest, I have a bunch for you guys, and then we'll go over the 21 over 21 list. So you guys got double today, 42 charts. First one, we'll start with NVIDIA because we trimmed it. A double failed breakout, double top. We had a failed breakout on earnings above 150. Now we had a failed breakout on the CES event, and that led to bearish engulfing, followed through, and now we're below 821 and 50-day moving averages. So we trimmed one half NVIDIA there, about 5% GLD as it wedge pops above this downtrend line in the 821 and 50-day moving average. Huge volume coming in. RS line also breaks out. GEV, another name that we are in, showing enormous relative strength at new highs, building this little high handle right here. ROBOTECTION also owns his name as well. And this is looking like it wants higher. VST, another name in the GEV group, the AI energy infrastructure, looking to break out this cup with handle. This is another name of relative strength. You can see this blue dot means RS line new high before the price has made a new high, and the price is still in the base. And in MarketSmith or Market Surge, if you use this platform, you can screen for blue dots right now, especially during a pullback and correction. You can find these relative strength names that are holding up. Next one in the group, CEG, it gapped out into all-time highs. Also, blue dot, relative strength new high confirmed as well on some acquisition news. They're acquiring some other company. Energy also in the group, building up with handle. Blue dot, relative strength line as well. Over 100 is a buy point there. Tesla is another name acting relatively stronger, still well above the 50-day moving average. Held the 10-week last week and this week. We closed the day actually. We had closed the day down 5 basis points, but near the highs of the day and continues to build higher lows here. So Tesla continues to act well. Earnings in 19 days. So I'll quickly run through the rest of the names I want to show you guys, and then we'll get into the 21 over 21 list. Reddit, we still own this. Undercut reclaim the 21 EMA, continues to build higher lows. ALAB also undercut reclaim the 21 EMA and also reclaim this January 2nd low. We'll see how this pans out. This could easily just rally up, reject the 8 and 21 rolls over, and we retest the 50 as well. But this is definitely still a leader. CLS is another leader, makes a new high. Relative strength also new high as the markets are in a correction. CRDO holds up as well in this post-earnings flag or base or shelf, however you want to label it. Still above the 8 EMA while the markets, S&P, NASDAQ below the 50. NTRA back tested the 8 EMA, held that. ONON reclaimed the 8 and 21 EMA and really started to build this flag right here above the 50-day. Rose undercut reclaimed the 8 EMA and still trending near 52-week highs. Spotify, same thing. Even though it reversed below the 8 and 21, still held the 50. Just building a nice shelf here. Embis, new recent IPO or spinoff. Really nice move today, up 8%. Undercut reclaim the 21 to 8 EMA and closed near highs of the day. Meta, same thing, closed near the upper ranges of the day. Undercut and reclaim the 8 and 21, held the 50 as well in near 52-week highs. Google, same thing. Even though it closed near lows of the day, it held the 21 EMA, also held above this base. It's also near its own all-time highs. Hood, another one near its all-time highs, or actually 52-week highs. Just building this base, building higher lows. And you have those flat tops right there. So it's definitely showing RS. 98 RS, relative strength line is pretty much at a new high. BRT, 95 RS, building a cup with handle. Closed near highs of the day, undercut, reclaim the 821 and 50-day. And then SMTC is another name, building this flat base right here. 5-week flat base. RS line is at a new high, 98 RS. And so after going through this list, you can see some common themes for how we spot relative strength. We're looking for stocks at or near its 52-week highs or all-time highs. We're looking for stocks above various key moving averages relative to the indexes. For example, we're below the 50-day 8 and 21 for the NASDAQ and S&P. So any stocks above the 50, and especially above the 21 and 8, are showing extreme strength. We're looking for relative strength, new highs before price, relative strength, new highs along with price, which we saw in some of these names. Stocks that continue to build their base, stocks that don't fill their gaps and continue to find support. Those are clues that point us towards relative strength. Or if you have a bad down day like today, where the indexes are down about 1.5%, stocks closing near highs of their range, finding support at key moving averages is telling us relative strength and potential leadership. So now I'll quickly go over the top 5 winners in the S&P 5, in the 21 over 21 list, and then the top 5 losers. BST we already talked about, looking to break out this coupled handle, relative strength, new high before price. There's an enormous amount of energy demand for data centers and AI, and companies, mega caps, and other smaller companies have such enormous demand for GPUs and data centers to power and train their large language models, especially since we're transitioning away from generative AI and more into agentic AI and eventually into physical AI like robotics. It's critical right now that we have these data centers and that these data centers can be powered. It's huge energy demand. Bros, second name, up 1.8%, pretty much at 52-week highs, continues to hold this breakout, undercut claim the 8 EMA, relative strength, new high. CLS we talked about as well, CRDO as well. GLD was the fifth name. We bought this in GROTECTION, of course. And then Bitcoin is also green, IBIT bouncing off the 50. On the downside, APP continues to leak off, but it did close highs of the day and above the 50-day. So you still can call this a relative strength name and potential stock that was a leader and potentially will continue to lead. The slope of the 50 is still up. Relative strength is still 99, but the RS is declining, the RS line. Marvell continues to hold the 21 EMA, so another leading stock. NVIDIA is one that did break the 8, 21, and 50, just like the S&P and the NASDAQ. So this is pretty much a market stock now. I wouldn't call this a leading stock now due to its failed breakout action and fall through to the downside. But we'll see. This could easily recover and try for highs again. This is still definitely a leadership stock, even though it's the fourth biggest down name in our 21 over 21 list. Undercut and reclaim the 21 EMA. And yeah, this looks like it could retest 150 in the 50-day, but it's still extraordinarily strong. And we'll see how this trades in the coming weeks. And then Twilio continues to stay strong, but we did close below the 21 EMA and we broke this downtrend line. The 50-day looks like it could come as well as the 100 area. But this one has made a huge move, so some pausing and basing action is completely necessary and normal. I just wanted to add from the Tilla tape, we did have some updated numbers in AAII and NAM exposure numbers, which we didn't update yesterday because the markets were closed. So AAII, bulls dropped the point below historical averages now. Bears are 6 points above historical averages and pretty much 1 percentage point below the 1-year bearish high. So from a contrarian standpoint, especially since the indexes have pulled in, really found support at the 100-day for the S&P and below the 50-day now for the Qs. If we do start to see some signs of support in the indexes and the leading stocks continue to act well, we'll definitely look to buy some startup positions once again, or even add on to our existing positions showing relative strength as the market turns. Because these relative strength names that we're tracking is what we'll call beach balls underwater. When the markets do decide to turn up, they will be the first to lead the next rally. And as always, pullbacks, corrections, and bear markets, the more severe and the higher the magnitude of the correction, the greater the opportunity it presents afterwards. It just takes patience and discipline to not get chopped up and lose money during the process. NAM exposure actually ticked up 1 point, but not much, still on the lows end of the range. So also you can use this as a contrarian standpoint. A lot of money managers dumped their stock and positions after it hit nearly 100, which is a time to start looking to get out of the markets. And so we look at sentiment and NAM exposure as secondary indicators, as actually contrarian indicators to fade the extremes of these numbers. Um, so yeah, if you just envision a pendulum when it swings to one side and it reaches extremes, the fact that it did reach an extreme fuels the move back to the other side. And that is how we use these two indicators. So with that being said, that's going to wrap it for this Friday video. As always, we'd love to hear from you. My email is ted@revereasset.com. My Twitter is tedhzhang. You can also email Dan or Don at revereasset.com, or you can call us old school at 855 Real Wealth. That is 855-732-5932. Our website is Revere Asset, where you can subscribe to our newsletter and receive the daily market insight videos right into your inbox so you don't have to miss a single thing. Our YouTube is also Revere Asset. You can check us out there. And yeah, if you're interested in becoming a client, please reach out to my email listed right here. With that said, I'll wrap it up for Friday, January 10th. This is Ted Zhang with Revere Asset Management, telling it like it is. Thanks for listening and have a great rest of your week.